Good morning, doctor. My name is Bwfn and my major company is 2FR92. Now I will start presenting our group assignment. Stock valuation for three company stock in food and beverage sector was AJINOMOTO, BERHAD, Apollo Food Holdings, BERHAD, 3A Resource, BERHAD. First, I will talk about the monetary policy and fiscal policy. Monetary policy was a financial tool launched by Bank Negara Malaysia to control money supply in the market by influence the interest rate in the economy. In promoting monetary stability, Bank Negara Malaysia is mandated to pursue a monetary policy which serves the interests of the country with the primary objective of maintaining price stability while giving due regard to the developments in the economy. Bank Negara Malaysia through Monetary Policy Committee (MPC) execute its monetary policy responsibility by adjusting its policy interest rate (OPR). The OPR is a sole indicator used to signal the stance of monetary policy and is announced through the MPC's monetary policy statement released after the MPC meeting. On 2023 May 3, MPC decided to increase the OPR by 25 basis to 3% to control the inflation rate. Fiscal policy is applied by government and the economic growth by adjusted the government spending and taxation to control the money supply in the market. Other economic factors that will cause inflation can be divided into two categories such as internal and external factors. Internal factors such as government spending, supply chain disruption, and exchange fluctuation. For the external factors such as uncertainty, such as COVID-19, global economic inflation, and increase in global commodity price. Next, we go to growth cycle of industry and competitive position of a particular industry. As we know that we analyze three resources, AJINOMOTO and Apollo. As we know that Apollo is a focus on manufacturing and trading food and beverage ingredients. 3S annual revenue show a positive growth rate that increased 50.40% from 2018 to 2022. Then, AJINOMOTO is a manufacturer of monosodium glutamate and other related products. AJINOMOTO shows a moderate performance that is annual revenue increased 11.1% for latest 5 years. Apollo was a company that focused on manufacturing compound chocolate, confectionery product, and layer cake. Apollo's revenue decreased slightly from 2018 to 2022 with 1.34%.
A very good day to Dr. and my fellow friends. My name is Tutule and my team number is 28622. I would like to present the fundamental analysis. Fundamental analysis include evaluation of comparing the financial conditions using financial ratios such as liquidity ratio, activity ratio, leverage ratio, earning ratio, common stock ratio, and stock valuation. There are two types of liquidity ratio. It's a current ratio and quick ratio. Current ratio and quick ratio are both used to determine a company's ability to pay off its current liability. But the quick ratio uses current asset exclude the inventory. From this table, we can see that the Apollo Food Holding BERHAD has the most adequate liquid asset of without inventory to cover its current liability. There are three types of activity ratio. These are account receivable turnover, inventory turnover, and total asset turnover. Account receivable turnover determines a company's ability to collect money from its customer. Inventory turnover mentions how well the company manages its inventory, and total asset turnover mentions how effectively a company uses its asset to generate sales. From this paper, we can see that AJINOMOTO Malaysia BERHAD has the higher ability to collect money from its customer, where Apollo Food Holding BERHAD perform well in managing its inventory, and 3A Resources BERHAD perform well in managing its assets. There are three types of leverage ratio. These are key equity ratio, equity multiple, and time interest earned. Key equity ratio is to evaluate a company's financial stability. Equity multiple mentions the level of debt financial in a company, and time interest earned mentions the ability of a company to meet its interest payment. From this paper, we can see that Apollo Food Holding BERHAD has the lower risk of insolvencies and use more equity financials to fund its activity, while the 3A Resources BERHAD has the strongest ability to make its fixed interest payment. Now I would like to pass to Bwfn to continue other issues. Thank you.
Okay, good day, doctor. I'm Bwfn, metric number 279469. Would like to continue present about profitability ratio. There are two types of profitability ratio, which are margin ratio and return ratio. Example of margin ratio is net profit margin, while return on asset and return of equity are the example of return ratio. According to these three tables, AJINOMOTO Malaysia BERHAD has the highest net profit margin, highest ROA, and highest ROE. In short, Ajinomoto Malaysia Berhad has the ability to convert sale revenue to profit and to gas its general effectiveness in producing return for its shareholders. Next is about common stock ratio. There are three common stock ratio, which are price to earning ratio, dividend payout ratio, and price to book value ratio. Based on the table above, Ajinomoto Malaysia Berhad has the highest price to earning ratio and price to book value ratio, which show that its stock is overpriced and indicate that it is an overvalued company. With that, it is anticipated of rapid future growth. Additionally, Apollo Food Holding Berhad has the highest dividend payout ratio, which indicate that less money is being put back into the company operation, but comparatively, more of its earnings are being distributed as dividend. That's all from me. Thank you.
In this analysis, the dividend discount model is used as a quantitative tool for stock price forecasting. The growth rates for three companies are as follows: 6.54%, -2.62%, and 6.03% respectively. Now let's summarize the valuation result for three companies. First, Ajinomoto Malaysia Berhad have market price RM 14.90 and intrinsic value negative RM 4.24. That means the stock is currently overvalued. Overvaluation may be a result of a market hype, speculation, or irrational exuberance, and the current market price may not be sustainable in the long run. That same with Apollo Food Holding Berhad that have market price RM 4.07 and intrinsic value RM 2.44. That means the stock is also an overvalued condition. Last is 3A Resources Berhad have a market price RM 0.75 and intrinsic value RM 4.84, and the stock is undervalued. That means many investors to consider investing in the stock. Overall, the analysis highlight the current valuation status of the three companies provide insight into their potential overvaluation or undervaluation, which can guide investors in their decision-making process. In this analysis, the free cash flow to equity model is used to determine the overall equity value of a corporation. The model estimates the cash flow generated by a company, its shareholder over time, and discount them to present the calculated intrinsic value of stock. Here's a summary of the valuation result for three companies. First, Ajinomoto. We can see the company intrinsic value is above the market value, indicating that it's undervalued. And Apollo Food Holding Berhad have the company intrinsic value is below the market value, suggesting that it's overvalued. And last, 3A Resources Berhad, the company intrinsic value is above the market value, indicating that it's undervalued. This attracts investors to consider investing in the company. We can see all of that data on the table. It's important to note that these valuations are based on FCFE model and the present value of future cash flow. Other factors such as industry trend, financial performance, and future prospect. In conclusion, the analysis shows the intrinsic value and the comparison to market prices for the three companies, indicating whether they are undervalued or overvalued. The information be useful for investors in evaluating investment opportunities.
Hello, my name is HANI BINTI NORDIN and my metric number is 28521. So I will be present about PE model and also recommendation. For the PE model, is actually the indicators of the company's value. A higher PE ratio, it means the investor willing to pay the earnings for the company, but the less PE ratio, the company will pay less for the earnings. So there are three companies that we need to investigate the intrinsic value of PE ratio: 3A Resources Berhad, AJINOMOTO, and also Apollo. So for 3A Resources Berhad, the intrinsic value of the company is RM1.28, while the current market price is 75 cents. This means that the company exceeds the current market price and it is undervalued. For the AJINOMOTO, the intrinsic value of PE ratio it is RM18.50 and the current market price is RM40.90. It means that this company is also undervalued because it is exceed the current market price. Next, for Apollo company, the intrinsic value of PE ratio is RM5.56 and the current market price is RM4.07. It means that this company is overvalued because the company is less than its current market price and the stock is overpriced. To summarize, 3A Resources and Ajinomoto may increase the value in future, while Apollo may decrease value in the future.
MACD and RSI was an indicator used for technical analysis for three companies' stock performance, and investor will take action buy or sell the stock according to RSI. Investors should buy the stock at the range given. Apollo Berhad gives the best performance with the highest RSI equal to 75.84% and MACD equal to 0.044.
Next, for the part recommendation, 3A Resources Berhad has shown good revenue growth over the past 5 years, but its net profit has decreased in 2022. Its market share has also declined due to industry growth outpacing its own growth. However, 3A Resources Berhad has strong R&D department and high recognition in food processing industry, which can be advantageous. It is recommended for 3A Resources Berhad to explore opportunities in online platform and new product to improve competitive position. Next, for Ajinomoto Malaysia Berhad has experienced consistent revenue growth, but its net profit has gradually decreased. It provides a variety of products and has strong customer segment. However, it faces high competition costs. To mitigate this, Ajinomoto can consider reducing costs through third-party retail partners and dedicated social network. Next, for Apollo, there has slight decrease in annual income and net profit due to decreased sale. It has good management team, but its business model is easily imitated by competitors. Apollo can support government regulation to level the playing field and increase their customer base. That's all from me. Thank you.